Decentralized finance has been a hot topic in recent times. Join as our leading fintech experts decrypt and shed light on some of the intricacies surrounding this landscape. Whether you are already a savvy investor or just curious, like myself, to know more, this session promises something for everyone. Notepad, iPad, get those all ready. Our panelists are Sean Lee, CEO of Algorand Foundation; Michael Wu, co-founder and CEO of Abra Group; Ken Chia, head of APAC Abra; and David Lowe, moderator, who is the general manager of Southeast Asia and Australia for Luno. Gentlemen, the panel and session is all ready for you. Take it away.
Good morning, everyone. Welcome to the panel, Defining the Future of Finance with Decentralized Cryptocurrencies. My name is David. I'm the General Manager of Luno Southeast Asia and Australia Businesses. I'll be your moderator for today's panel. We're going to talk about decentralized finance, obviously, or more commonly known as DeFi. Joining me today is Sean Lee from Algorand. Hi, Sean.
Hello. Hi, how are you?
Ken Chia from Abra. Hi, Ken.
Hi, nice to meet everyone.
And last but not least, we have a unicorn in the house, Michael Wu from Abra Group.
Hi, everyone.
Thanks. Before we start, I'd like to provide the esteemed audience here with some background for each speaker and the organization they work for. Sean Lee is the CEO of Algorand Foundation, where he leads a team of cryptographers and economists as the custodian of the Algorand blockchain protocol. It is a highly scalable and decentralized digital currency and transaction platform that was founded by Alan Turing Award winner Silvio Micali. Previously, he held leadership roles within global technology companies, working primarily with financial services clients and partners across 20 countries. Now, if you're a developer or innovator who wants to build the most powerful and scalable decentralized application, the Algorand network may be perfect for you, as it is the next generation blockchain providing a high performance, sustainable, and reliable transactional network that powers easy to build and robust global applications. I personally hold some Algo tokens, so I highly recommend crypto newbies to take a look at it. We have Michael Wu. As I mentioned, we have a unicorn in the house, Michael Wu from Abra Group. Abra is actually a leading global digital asset platform that builds and delivers the best in-class services and products to users globally by helping customers to buy and sell digital assets, earn yield, and manage risks across digital assets. It was founded in 2017. Abra Group now has a team of more than 500 people around the world with 12 offices on 3 continents. Abra services over 800 large institutional customers and an increasing number of retail investors across the globe. It has also very recently in June achieved a FinTech unicorn status after their latest funding round of $100 million from world-class investors such as Sequoia Capital and Tiger Global, which obviously gives it a valuation of $1 billion. Congratulations to Michael here. Great news for crypto overall as well. It's really a validation of what all of us are doing in our own space. Last but not least, we have Ken Chia from Abra. Abra is on a mission to create a simple and honest platform to enable millions of crypto holders to maximize the potential of their crypto assets. Abra operates an easy-to-use mobile app that allows users to access interest earning, buying, selling, and trading of cryptocurrencies in one single place. Abra aims to be an open global financial system that is made easily accessible to everyone around the world. Ken leads Abra within APAC with over a decade of experience in finance and crypto, including 5 years at JP Morgan. Ken also has a focus on high net worth individuals and institutions within Abra. Welcome, gentlemen. It's a great pleasure, obviously, to have each of you here. Now, moving straight into the panelist discussion, the nature of finance has changed. What you once knew as money and traditional investment assets are being decentralized, creating new digital currencies and digital assets that will dictate the economy of the future. In fact, there are clear signs that the future is already here. Just yesterday, according to data from CoinGecko, DeFi has exceeded $172 billion in market cap, and it looks quite likely to hit the $200 billion mark before the end of this year. Let's start off with a fairly broad question to Sean. Sean, looking at DeFi's tremendous growth, Now, what have been some of the most surprising or unexpected trends in decentralized finance over the last 10 months?
Well, thank you. Thank you for that question. I think it is an interesting one. And even those of us that are in the industry are continuing to be questioning some of that ourselves. And I think a couple of the things that in my mind that I'd be thinking about would be the speed at which liquidity have been flowing into the markets from a DeFi perspective. And then also in terms of the speed of innovation that are happening in this space as well. And I'll cover a little bit of both, and I certainly would welcome comments from the other panelists as well. I think from a capital perspective, as we continue to look at the world of interesting monetary policies, starting from the largest developed economies all the way to the emerging markets, we can already see that I think the value of money have been changing very rapidly. And investors and asset holders are constantly looking for other asset classes where they can deploy their capital, both from a retail perspective and also from an institutional perspective as well. And DeFi is increasingly becoming that space where a lot of folks are looking into. Now, is the space very developed yet? I would say it is in the infancy in terms of where it's going. But the potential and the power that it can bring, both from a wealth management perspective, wealth accumulation perspective, as well as from a financial inclusion perspective, it is actually very tremendous. And I think that leads me also into the innovation aspect, which is, I think a lot of the products that you're seeing in DeFi today mimic very often what we see in the real world. The difference there is it is done in a much more decentralized manner, thereby decentralized finance, but also it's done in a more accessible way, right? So folks that are in emerging economies, especially, that may not have access to equitable financial services, now have an opportunity to be able to open the wallet and to invest and look at various different assets and services that they can provide and be able to gain access to those things that normally in the developed world with very mature financial services systems that we are able to enjoy pretty much most of our lives. So I think it's bringing a balance in regards to where things are, the innovation, the speed, and also the flow of capital from kind of the conventional industries into DeFi is probably what has been most surprising as far as as far as I'm concerned in the space over the last year or so.
Thanks, Sean. Michael, what do you see on your side? Because obviously you run a huge company. Would be interesting to also understand from your perspective what has been the most unexpected things in cryptocurrency or DeFi in general.
Sure. Thank you, David. I think, I agree a lot with what Sean just mentioned about DeFi. It is still in its infancy, but at the same time, its growth is astronomical, and it does bring a lot of benefits to, broadly speaking, both, the underserved population who has their financial needs, but that wasn't met enough by traditional financial institutions in many countries, regions, and also, nowadays even more so with institutions who look for new ways to access yield, new ways to invest, and new ways to have a different kind of financial exposure and have different kind of underlying technology to build a portfolio with. Now, on our side, I think we, Amber Group as a whole is one of the largest liquidity provider for the whole broadly defined digital asset space. So, day in and day out, we not only, contribute a few $1 billion of volume every day to the market, but also, we see all kinds of activities from our customers in regard to the end liquidity. So there's a clear shift from, sort of almost a dismissive attitude from institutions towards DeFi to now, pretty much more or less everyone's, embracing it, or at least trying to understand it. To give one example, in 2018, I think when we started to dig into DeFi, when one of my co-founders, Tian and Kulander, who first, brought a partnership with Compound back then, I think very few, even within Amber Group back then, not to mention our customers, understand what DeFi is, right? Nowadays, day in, day out, we get questions about that from, all the, largest billion-dollar hedge funds to individual investors. They are curious. They've seen a little bit of the boom and bust over the past I guess 12 months or so. And more interestingly is that now they have a more and more clear demand, or I guess they have a better understanding of what they want out of DeFi. I think we're seeing investors or users start to differentiate themselves when it comes to their DeFi demands. Some just want the end yield. They actually don't care how that is accessed, right? They're more than happy to access through a digital asset platform like Amber Group to access that yield, and they do not care too much about how that's done or where that yield comes from, right? But in that sense, you really need almost like a caretaker kind of role in between, right? To actually pass them not only pass them the good yield, but also help them understand the kind of risk they want to take, and to protect them away from the risks they shouldn't take, right? And then there are also players probably on the more sophisticated end that wanna get deeply involved in building the ecosystem and to be part of the DeFi ecosystem, right? We see traditional trading firms that stepped into the DeFi space. There's a Pyth network, which Amber Group is a part of. A lot of the price feeders, or I guess the Oracle providers, are actually traditional trading firms that prior to this didn't have much exposure to crypto, not to mention DeFi. And lastly, there are a lot of firms or a lot of very talented teams, individuals that actually want to start to build a new DeFi ecosystem across different underlying protocols, across more than just Ethereum. Now they're building on Algorand, on Solana, on Avalanche, etc. And they are building new ways, new products that before didn't exist, because now we at least have the infrastructure layer, the basic borrowing protocols, the basic lending protocols, the basic trading protocols, etc. So now people are building upon these to have more sophisticated offerings. For example, one of the projects that we incubated ourselves is KeeperDAO, right? That's actually still by far the category leading liquidity underwriter in the space. So these things are being built by institutions that maybe a year or two ago, didn't have much exposure in DeFi. Now they are not only investors, they're also builders.
Great. Very curious, Michael. If you just compare 2 years ago, obviously there's a lot of progress that's been made in the crypto space. I mean, each of us here has been in the crypto space probably at least for 3 years. And we know that the level of awareness today compared to a few years ago is very different. But would you say that awareness on cryptocurrency and DeFi has reached to a mature stage? Or would you say, like what Sean has mentioned previously, right now it's still very nascent? We've seen a lot of interest, but still very early days, and we probably will look at in the next 5 to 10 years before we can truly say that awareness on DeFi and crypto is already on a global stage. What do you think, Michael?
Totally. I think, like you and Sean mentioned earlier, I think, DeFi is still in its very early days. Right now, if you look at the average consumer, right, average retail investor, they've most likely definitely heard of Bitcoin, right? They likely have heard of Ethereum. They might have heard of DeFi, but, I highly doubt many of them actually understand what that is, right? And I've looked through, many of the sort of the articles trying to explain what is DeFi. And I cannot imagine say a non-finance person or a non-crypto person can easily understand it, right? And that's not the fault of these these sort of educators, these writers, right? DeFi though right now is still sort of complicated. The whole user experience is still sort of complicated, right? And the whole underlying design is still too tech heavy. So you really need firms like ourselves to work on the experience to really simplify the whole experience, right? Simplify the whole, starting from the very basics, simplify the whole wallet experience, right? As a first step, simplify the whole investing experience, simplify the whole sort of portfolio tracking, portfolio understanding experience. And therefore, you can actually have, eventually, billions of people actually benefit from the true power of DeFi. Comparing to that vision, I think it was still in very early days. Now it's still probably mostly fueled by crypto natives, which is great because these are the ones that are power users and also building upon the ecosystem. But also, among the non-crypto native users, we are seeing either very sophisticated institutions or finance professionals taking a dab at it, or we are seeing speculators getting into it without really understanding what's going on the risk. So I think there's still a lot of work to be done, and I'm sure guys on this panel and beyond are working very hard day and night on that.
Thanks. Very good insights. Definitely, I think there's still a lot more challenges ahead. I just want to pick your brain, Ken. What do you think is the major stumbling block when it comes to moving these new technologies that's very complex in nature into the mass market in terms of adoption and awareness? What do you think is the biggest challenge within the crypto space?
Yep. Thanks, David. I think, and also to the other panelists, Michael and Sean, I'd like to also echo Michael's point on the general user experience and interface in DeFi. I think that's probably the most common stumbling blocks when it comes to getting real major adoption by both crypto and non-crypto natives. I think the user experience in DeFi today is cumbersome and confusing, to say the least, especially to newcomers. If you want to perform an action and to transfer coins into different protocols, and you need multiple clicks, you need to check on your gas fees, you need to bridge across chains. Like if you don't understand what I just said, like you're not alone. A lot of people are still trying to figure a lot of these things out. A lot of these things are still being built today. And in terms of the innovations that's coming out from community-led developers such as 8board and Zapper, aggregators to help the power users and also hopefully the general user down the line to understand the space, and also for the institutional participants such as Abra, players like Into the Block provide that layer of infrastructure to gain exposure into DeFi investments, to manage risk, to perform reporting requirements with ease, and to monitor collateral levels and maximize yields, for example. So I think that is definitely the main stumbling block in terms of user experience. The second, I would say, is just general education and investment knowledge. I think just to echo Sean's point earlier, I think a lot of the innovations in DeFi, what we see today is starting off with what's existing in the real world in traditional finance. So your interest rate swaps, your borrow and lending. But at the same time, there are a lot of crypto native innovations that are being invented. For example, the concept of impermanent loss and recursive farming and flash loans. A lot of these things don't exist in the traditional financial system. So I think there is a big gap, and therefore a lot of new investors may not fully understand the risk and therefore the risk reward in some of these investments that they see on DeFi. And I think this is a big stumbling block that prohibits investors from deploying significant capital directly into DeFi. And that's where players like, I guess, Ember and for Abra as well, I think we provide a simple way for users to get into DeFi exposure.
Thanks, Ken. I'm going to start taking questions from the audience. We've got a really interesting question that just came in. Keen to get your thoughts on it. So an anonymous user asks, the US SEC Commissioner Caroline Crenshaw questioned the very nature of DeFi, calling its lack of transparency and pseudonymity structural hurdles that are bound to hold the market's development back until appropriate investor safeguards are put into place. Oh, I love these kind of comments by regulators. What are your thoughts? Because I'm sure that yeah, Sean.
I'll take that one first, and I think all three of us love to chime in here, right? And echoing kind of Ken's point about education about this industry, I think that is really key. If you look across the last 20, 30 years with new innovation, new technologies that were coming into place, none of us here are questioning the validity of the internet, right? All of us are using cloud computing every day. We don't question it anymore. 10 years ago, regulators were questioning the exact same thing, right? In very different manners, since there's no investment aspect of it. But usage, data privacy, data sovereignty, these are things that I myself were part of those conversations very often, especially with the regulators. So I think from an education perspective, both in terms of the end user, going all the way up into the public sector, that really does need to happen, right? My view has always been, you can't look at crypto and in relation to DeFi without really trying to understand what the blockchain does first, because these two things have to work with each other. There's a technology infrastructure that is the blockchain, and then there's a transactional layer on top of it, as well as assets that are being transacted or swapped, in exchanged within that network. So you almost have to look at the technology in terms of what it does. And I think the comment about the lack of transparency in DeFi, that's actually sounds very funny, because those of us that are in the industry, you have the most transparency, you have the most traceability of all transactions, especially when it comes to a public blockchain like ours. So the notion about transparency is actually quite interesting from that perspective, because if you do know how to track it, everyone can actually do the same thing. Now, of course, there's a gap in between, right? Not everyone knows how to look on a blockchain to look for transactions and trying to trace the assets. And that is where the education component needs to come in as well. So I think in the DeFi space, in the crypto space, is not only about understanding this new asset class and the nuances with it and the risk management aspect of it as well. There's also a technology component that needs to come along with it. And I think we no longer can look at this as a financial instrument, a financial product. If you think about it, even in the conventional world, many of the financial products are essentially technology products as well, right? That's why a lot of us are talking about FinTech, TechFin, but the reality is technology and financial products and transactional products are really tied at the hip these days. And blockchain and crypto is a perfect example of that. And we just need to do our job, especially for us as an ecosystem, as a foundation organization. It is up to us to work with our community, work with the various different constituents, and try to educate and try to bring more awareness in terms of where things are going in that regard.
Thanks, Sean. I think 100% there. Education is really the key to bridging these gaps. Personal question from me, myself, very curious from what Ken and Michael have seen over the past few years. Have you seen a shift in regulators' view on cryptocurrency, blockchain, or even DeFi in general? And has that shift been encouraging? What are your thoughts there?
Sure, I can take this one first, and then I will let Ken add or share more on that. I actually think all the signs I've been seeing, or at least from our end, has been very encouraging globally. Of course, there are regulators that take a more conservative or even I guess less encouraging views on crypto or blockchain in general, but more so are taking a more open mindset towards crypto and broadly blockchain enabled digital assets. And I think most importantly, I think there's just more and more clarity. Right, the more regulations that actually come out, I actually think that's better for the industry, because I think as long-term focused fintech entrepreneurs, which I'm sure all of us are, right? The thing you want is actually clarity, is actually certainty, so you can plan your business around it, plan your product innovations around it. There's a framework for you to sort of innovate alongside with, right? I think that's the most important thing. So as long as regulators tell us, what they are okay with and what they are not okay with, where are the boundaries, what are the things they really care about. I think there's always a solution. And, at our firm, right, actually, we think the solution is, again, with technology. We are, as you mentioned earlier, we are an over 500 people team globally now, and 75% 5%-ish of our team members are, coders, developers of some sort. So, at the core, we build a lot of technology. And, a lot of those technology also help in our dialogues with the regulators, because, once we understand what they care about, right, then we can build, systems that better track the kind of stuff they care about, right? We can build systems that, sort of safeguard or tier different requests against different customers or in different regions, because there are different regulations, right? So, as long as there's clarity, or, at least, we feel the regulators are moving towards more clarity, I think it's extremely bullish for the industry over the long run, right? The least thing you fear is actually, have crypto remain this sort of a quote unquote unregulated territory, because that's not gonna last forever. So, you are in those cases, right? Maybe there's potentially more short-term revenue to be made because you can sort of do more, or, there's less things, less constraints, or, less resources you need to spend to comply and all of that, but that's not sustainable, right? So you can't plan your business long-term, without those kind of clarity, right? And, with that said, keep in mind, all these regulations evolve, right? Regulators understand them better. RegTech evolves, right? RegTech gets better. So, we need to also take a forward-looking view on things, right? To see where they are, where the regulations, where they were, right? And, and have sort of a projection where things are going. And, but again, once you sort of can make these kind of forecasts, can make these kind of projection, can have a view or a vision of, where regulations going, or how the whole space will be reshaped by global regulators, then you can at least plan your business long term around it.
Yeah,
totally agree. I think with everything that Michael has said, I just want to start with something that Sean mentioned earlier, which is comparing crypto to the internet. And I think the internet technology is a very suitable metaphor here, because if you look at long-term trends, the crypto adoption is on track with internet adoption. And as we know, this is an unstoppable decentralized technology that's gaining adoption over time. And that poses a real challenge for regulators, because when you post something to a regulator to say that this is something that they cannot stop, similar to how you can stop the internet, how you can stop things like BitTorrent. But at the same time, echoing also Michael's points, we do see globally across the world, regulators picking up very quickly. Of course, with countries like the US leading the way, in terms of more mature regulatory framework, gaining more clarity, providing guidance for specific nuances, tax treatment in crypto, for example. And in Singapore here, I think the approach is also very progressive, a little bit more of a wait and see approach, but at the same time, very proactively trying to learn from us as industry players, and then implement applicable laws based on the feedback. So I think overall, it's very good for general mainstream adoption for cryptocurrencies, put safeguards in place, and investor protection. So I think it's all going the right direction, and very exciting space to be in.
Ken,
Thanks,
I might actually say, sorry, David, I was just going to add, I might actually say, Ken, I think Singapore is even more progressive in some sense than the United States, right? Or other developed economies. It just look at the way how crypto, the asset itself, is being treated, whether it's a securities or commodities or futures contracts, or in the form of a digital payment token. I think that definition brings a lot more clarity in terms of how cryptocurrencies, at least from a layer one, perspective, should be looked at. That actually brings forth a lot more possibilities, both from a regulatory perspective and investor protection side, as well as consumer usage. And I think I would applaud many of the policies makers in Singapore in terms of that forward-looking thinking, rather than constant debate, from one party to the other. I think that's actually very progressive in that regard.
Thanks, Sean. Certainly, I think your observation is fairly good, right? I think from my perspective, it's interesting to see how different regulators in different markets behave or react towards the technology. But I think at some point, right, with a lot more education, we're all going to come back into a similar path where these new technologies will have to go into some sort of framework under the existing regulation. When I just obviously we only have another 3 minutes. Definitely want to pick your brains a lot more, but you know we don't have a lot of time left. So what would your average parting advice be? You know, to the average person who wants to get into this space, who want to learn about cryptocurrency, not DeFi, but just cryptocurrency in general. What do you think? How can they get started? What do you think, Sean?
Well, I think I would look at it this way. You know, from an Algorand Foundation perspective, we kind of look at our community in 3 groups, right? 3 constituents. There are your developers, there are your partners, people that are building, and then there are crypto holders. I'll broadly call them that. And very quickly, I think the developers in that space, if you want to be a next generation developer that are building financial instant applications and system for tomorrow, you need to get into that space. Doesn't matter which protocol you choose. Doesn't matter where you start. Get started. I think it's probably what I would advise most students or developers that are really looking into getting in the space. When I'm looking at the partners though, the ones that are actually building applications, whether it's in DeFi or NFT and any of the other categories, I think what you should be really focusing on is if you're investing time and resources in building, then look for a protocol, look for a platform, right? That is sustainable, that you can stand on, right? Because I think if you think about the future, all of us care about the environment. And there's a lot of negative press out there about how Bitcoin is very, very energy consuming and so on and so forth. And some chains do indeed fall into that category. But there are many chains like ours, for example, that are carbon neutral, very low energy footprint, very high throughput, and that will facilitate a lot of the transactional aspect in terms of what we're talking about here today into the future. So I think from a partner perspective, picking the right technology, the protocol, and the platform to build on becomes important because your starting point is that critical. And then lastly, the crypto holders. Look, I think this is an evolving space. Michael and Ken shared a lot about that view, especially from their industry as well. Educate yourself, right? Don't think, hey, this is another token, meaning another stock that I can just buy and sell, right? If you are an educated trader in the conventional world, you can probably handle crypto. But if you're not, and you're just following the trend, and Bitcoin's going up, so I'm going to go buy Bitcoin. I can now buy stake tokens and buy LP tokens and all of those. You might be confused. And if you're not educated yourself enough, then the danger is going to be there. And I want to reemphasize the fact that the risk aspect, which most retail investors may not really think that much about, risk appetite, risk exposure is something that education really needs to happen. And I would encourage all that are really looking into this space from an investment perspective to spend some time in that regard.
Thanks, Sean. Great insights. Michael, what would your average advice be to an average person?
I think Sean said it very well. Get started, and get involved, and start to learn about it. I mean, at the same time, I understand we're in a bull market, right? But also gotta hold back a little bit. I think this is a long process, and as we kept saying, I think this is still infancy days for DeFi, and broadly speaking, even for crypto, this is still very early days. So especially if you are a young person, right? Broadly speaking, or you wanna probably start learning more and more about it, but without taking on risks that you cannot afford, or that might actually discourage you from the learning, right? If you avoid taking on leverage, avoid putting on positions that you cannot afford to lose, get involved. I think the long-term benefit of adopting to crypto, adopting to DeFi, adopting to this new technology way outweighs any short-term returns. So that's always been my view. I think everyone at this point need to be aware of crypto, need to learn about crypto, need to get involved, right? But I also think that you need to be involved in the right way. If you bet your whole whole house on one token, or all of that. You're actually not learning. You're just watching the price going up and down, which is probably not very helpful.
Thanks, Michael. Certainly great advices. Ken?
Yep, I think I will start by saying that investing directly into DeFi is certainly not for everyone, at least not yet. In some cases, it can be complex or hard to understand. Maybe you don't have the time, and there's also execution risks. You can send coins to the wrong place and it's gone, for example. And you can always start with, for example, working with Abra, or like opening an account with Abra, where you can, have a mobile app, easy to access and optimize your crypto assets and generate yield. What we believe to be some of the safest and simplest yields in the crypto institutional lending markets. That's one way to do it. And for people who are a little bit more adventurous and really want to get into DeFi, I would say just put some money into it and just play around with it. You figure out how your blue chip protocols like Uniswap and Aave and Curve, how all those things work, interact with each other. What we're witnessing today is similar to the modern or traditional financial system being built on the blockchain. So it's very exciting. And it's impossible to teach someone about DeFi without any hands-on experience. It's like trying to teach someone how to play a video game without any experience. You're just trying to teach it in theory. It's just not going to work. So you need to understand and have a feel of the mechanics, get a little bit of intuition. It's much better than any theoretical knowledge. And definitely do your homework. Educate yourself. Make sure that you read 10 times and do one time, and just be careful out there.
Thanks, Ken. Thanks for the insight. Certainly, I think don't jump into DeFi first. Start from the basic of blockchains and cryptocurrency in general, or even just with Ethereum and Bitcoin. It will be a great start. Don't jump straight into the riskiest of the assets that is still very, very new. And I think we all echo that view here as well. Overall, great session, guys. Really appreciate the time and insights. To the audience, I hope you've picked up some great tips from our speakers here. Please feel free to reach out to any one of us. We'll be more than happy to connect, obviously, and have a wonderful day ahead. Bye.
Thanks everyone. Bye.
Thanks.